Cool. Off you go, Christian. I'm not quite sure
Okay.
exactly what the number is, but yeah, welcome everybody to the WF office hours. Today we are here with Christian to talk about the introduction to the Maker Delegated Committee that is particularly applicable to the SocGen and HVB deals that are upcoming. So, Christian, I'll let you go.
Okay, great. Thanks. Well, good afternoon, everybody. Since I am screen sharing, I guess if you have any questions, put it in the chat. Otherwise, just speak up and feel comfortable interrupting because I may not see if you raise your hand. So today, we've kind of introduced the concept of this Maker Delegated Committee in some of our earlier office hours, as well as some of the materials we've put into the form. But really, I guess about a week ago or so, I posted a call for volunteers seeking members of the community who would be interested in participating in the Maker Delegated Committee or committees. So thank you for all of those that have expressed an interest in this presentation. Is really to kind of go one step below and kind of explain what it is that we're looking at, how they relate to both the SocGen and HVB transactions, which are the furthest along, answer some questions. I think just to start off, I just kind of want to point out, this is all still very much experimental. If you were working at a large financial institution, there'd be a well-established procedure and process for this, but Maker is different. And we want to approach things differently. So, we try to make things as decentralized as possible, yet at the same time recognizing, as a practical matter, there are certain things that need input. And kind of this Maker Delegated Committee, for now, is one way that we've come up with to allow Maker to have input on what's happening with respect to the financing of real-world assets. And again, it's experimental. I think all of us are very happy to take new ideas, challenges, questions. If you think it's crap, let us know. That's okay too. It's just our kind of starting point. And as we onboard more assets, we very well may change things as we go along. So,
hey Christian, hey, it's Eric. Can I jump in one sec? I just wanted to highlight or support Christian that this really is experimental. Or Maker and DeFi in general, it's a new way of doing business, a new way of decentralized governance, and some of these issues have not been addressed before. So we're taking we think is a logical experiment to address this. We'll see how it works, gain feedback, and who knows, maybe in 6 months or 3 months it'll change again. But I think it's most important that we take kind of first principles, reasonable first steps, and discuss it with folks. And if they're on board, let's try it and see how it goes. And then we will learn one way or another. In the venture world, what do they say? Fail fast, learn faster. So I think that's an important thing, is that learning how to govern effectively in DeFi is an evolutionary process where I think there's a long way to go. And I think it's important that people make good faith, reasonable attempts at improving it. And then you learn from that, and then you adapt accordingly. I think it's really important to see that this is an evolutionary process as to a static thing where we should have like the end all set to go. And I don't think we do. I think there's a whole lot of learning here, and what we think in 6 months or a year is probably different. Thanks.
Yep, thank you. Yep, thank you. So basically, we have a need for a delegated committee or committees for the SocGen Forge transaction and the Huntingdon Valley Bank transaction. And SocGen, for those that may be less familiar, is onboarding of what they call their OFH token. It's a tokenization of French covered bonds. We're actually probably within 48 hours of actually publishing the risk assessment for SocGen Forge. We're actually wanting to do it after we had this meeting, just so that we could identify some potential delegated committee members. Huntingdon Valley Bank is the whereby Maker indirectly will be acquiring loan participations in loans that Huntingdon Valley Bank has originated. So basically, what is the Delegated Committee? I mean, broadly, it will support decision-making on matters that do not involve Maker sacred rights. And we'll revisit this issue of Maker sacred rights and expand upon it a little bit. But I think it's important to recognize that each deal is going to be different in terms of what constitutes decisions outside of the Maker sacred rights. And frankly, each deal will be different. It will be more expansive rather than less expansive in terms of what actually constitute Maker sacred rights. And I think the Huntingdon Valley Bank transaction will, as we'll see in this presentation, will give you a good idea of expanding Maker sacred rights. We don't envision that we would limit or decrease the number of Maker sacred rights. So let's talk about what that is. So you have decision making for real world assets. You've got agreements, you've got stuff happening in the real world, and decisions need to be made. So the way we have looked at it initially is, okay, there are sacred rights, which you could delegate to Maker. Everything else to a delegated committee, with an exception. There may be some just general administrative stuff that you can delegate to an independent third party. But this is really kind of decision-making as opposed to administration. So how have we defined the Maker sacred rights? Well, we've defined Maker sacred rights at a minimum as the following: increasing the debt ceiling, decreasing the debt ceiling, a reduction in the stability fee or interest rate, an extension of the maturity date, an acceleration of the loan, i.e. liquidation, or, and this is where each deal may be different, any other matter decided by the Maker token holders from time to time. And the idea here is really, what are those things, when you think about DeFi and Bitcoin and Ethereum that go into a vault, or the various on-chain collateral that goes into a vault, the Maker community really only votes on should that collateral be onboarded, right? Once or offboarded, I guess. But once somebody opens a vault and deposits their collateral, the liquidation, just things automatically happen. There's not a lot that the Maker community has to do going forward. There's kind of onboarding and offboarding, and those are the two real decisions. Financing real world assets requires a lot more, but in trying to keep with that ethos, we've proposed these as the sacred rights. But because these are real world assets, there's a lot of other decisions that need to be made. So I think most everybody, if they've seen our prior presentations, have kind of seen a version of this or an exact copy of this. These are the types of agreement, types of decisions, an example of decisions that might be made in day-to-day administration of a loan. Now, each loan is going to have a different set of decisions depending on the borrower, depending on the asset, depending on the collateral, depending on the loan. But this is an example. And we didn't think, given this breadth of decisions, this granularity of decision-making, that it was really appropriate for every small issue, every medium-sized issue to necessarily go back to the Maker community, because it would just really become unwieldy. So, and this is again a slide that Eric had prepared and we had presented, and kind of how we began thinking about decision-making for Maker ruled assets. You kind of have high impact decisions, which would go to the Maker token holders. Those were major changes in the management of assets, changes in the program and program governance. Again, those are what we call Maker sacred rights. You have medium impact decisions, which we thought could be delegated to the committee. Administration of defaults, amendments, so on and so forth. And then there are low impact decisions that to the extent possible, we would seek to engage independent third-party agents to perform those functions for us. Now, as Eric has previously said, public securitizations of investment-grade assets are actually highly, highly decentralized. And one of the reasons we have been pushing investment-grade assets is because it's the most decentralized. It doesn't really actually require the maker community to do a whole lot, because you're able to allocate a number of activities to third-party agents. But to the extent that assets are not investment grade and there is required more decision making, then you've got to say, okay, who's making those decisions? So in the
Can I
yes,
jump in this? I think
yep.
that's a rough split. I think it's also just some assets are more complicated, and even though they're investment grade, they're still take some more work, like revolving facilities where every week maybe the credit card issuer wants to get a new draw. So there's some things that are easy and take less work. And so if they're high credit grade and the assets don't take much work, it's easier to fully decentralize them with third-party agents. Even if they're high credit grade, if they still take more operational work, you potentially are going to need more decisions.
Yep. So the next slide, what is our goal in creating a delegated committee? One is try to bring on people that have structured finance expertise. Two, have people that will feel comfortable in getting familiar with the deal. Now, at the end of the day, this committee should rely on real world finance, should rely on legal transactional services, should rely on love, should rely on CES for support. We're not expecting the delegated committee members to necessarily know all the ins and outs of a particular transaction. That's what we're here for. I mean, that's what we do. But at the same time, the members of the delegated committee have to be engaged. They just can't, blithely go along and say, oh yeah, that sounds good, without kind of asking questions and becoming familiar with the deal. Members of the committee need to be available. When stuff happens, and sometimes you need to make decisions quickly. We want to make sure that the members of the committee are aligned with Maker. And what we mean by aligned by Maker, it's not enough just to be in the Maker community, but it's not to be entangled. So, there had been previously a real world asset committee, and there was a MIP for it, and it was approved, but that was comprised of, originators of assets. Well, you can't really have the borrower or borrowers or originator assets, those entities that are actually using Maker to borrow actually serve on this delegated committee. These individuals actually need to be thinking about Maker first and foremost.
Christian, I think an interesting reference point here is, say, in board of directors, at firms, they are under the obligation to provide two duties: duty of care and duty of loyalty. Where duty of care is basically using good, reasonable judgment. You can't be fast and sloppy and not care. Or in theory, you could be liable. Not that you would here. You got to do a good job. And two, loyalty. You have to be loyal to making the decisions about the assets first and foremost. If you have other commercial entanglements, you should probably recuse yourself. Because if it impinges on your duty of loyalty, in the real world, they would think you probably shouldn't be voting on it.
So next slide. Okay, so here, so I guess before we get into the two deals, does any questions? Just speak up. No? Okay. So moving next to SG4ish, this is just a high level representation. Don't worry about all the 1s and 4s and 2s and 3s. I was lazy. I cut and pasted from the risk assessment. But basically what this presentation is what this slide is intended to show is that the Maker Delegated Committee is in effect there to assist D's Group under what is the instruction that Maker will give to D's Group. So like you're saying, who's D's Group? D's Group is a French company that has been selected by SocGen to serve as kind of Maker's real world representative. So when we have the loan agreement with SocGen, technically Maker doesn't sign anything because Maker doesn't exist to sign anything. It's D's group that's signing it for and on behalf of Maker. The pledge agreement that we will have, and we'll have a security interest over the OFH tokens. Maker can't sign that, but D's group is signing that pledge on behalf as the security agent on behalf of Maker. And where D's group gets its authority will be when the Maker community votes on the transaction, there will be part of what is being voted on will be the instruction. And that instruction will basically say to D's group, hey, you D's group, we Maker community approve your taking these actions on our behalf. It was an interesting discussion when we first started off the transaction, because the first draft of this instruction was an instruction signed by Maker. And my first comment was, well, Maker can't sign anything. So we need to do something different. So we structured it so that the community speaks through its vote and is speaking in respect of this instruction letter, which will be posted because it'll be all out there. Everybody knows what they're voting on. And this instruction letter will basically tell D's group, hey, you need to be acting for and on behalf of Maker in these real world assets. Yes, you have the authority to sign a loan agreement. Yes, you have authority to sign a pledge agreement. And by the way, some certain of the actions that will be happening in terms of working the smart contracts, and CES has been working with D's group and SocGen, will actually be performed by D's group. So they're kind of serving as a, if you will, Maker's representative. However, we still wanted to have this kind of outlet such that if D's group ever had a question, that they had somebody to turn to. And I think the SocGen deal is actually fairly straightforward. I mean, these are French covered, these are covered bonds secured by French mortgages. The underlying asset is very much a public securitization where actually not a lot has to happen. So in some sense, I'm not anticipating the Maker Delegated Committee to actually have a huge role in this transaction, simply because the underlying asset is structured in such a manner that it's pretty well tight, and there's not a whole lot that we envision having to happen now.
Christian, can I make
yes,
a point? I think first thing I'd say, folks, is this comes right out of the SocGen risk assessment that's coming this week. So it's worth looking at this. It'll get you up to speed on the risk assessment. But two, the collateral backing this is what we call a covered bond. So it means it's both a corporate obligation of SocGen and you've got this real collateral behind it. In a sense, if SocGen, which is rated single A, performs, then all of this, everything else we were talking about the agent, I mean, the Maker agent doing is unnecessary, basically. You're only probably really gonna need the agent if SocGen is in financial distress. And then in that very small chance, then it starts to matter. In a lot of these deals, if things go well, you don't need a lot of help from the committee. On the small chance things go sideways, that's when the committee could become more important.
Yeah, correct. So that's kind of where the Maker Delegated Committee sits in the SocGen transaction, not just to transition to HVB. So HVB is slightly different, and this is coming from the HVB risk assessment that's in progress. So what you see at the very bottom is the trust, and this is the infamous Delaware statutory trust that we're creating that will be purchasing the participations. You have WISFIS, who's anticipated to be the trustee, the paying agent, the verification agent, just like in the success case. We actually will have appointed a calculation agent, which we tentatively plan on being Ankara Trust. And Ankara is basically going to be performing a role that is, HVB is going to submit a loan and say, hey, this loan meets the eligibility criteria. You trust, will you buy it? And basically Ankara is going to look at the information that's been provided by HVB and confirm based on the eligibility criteria whether all the eligibility criteria have been satisfied. And if they have been satisfied, then the trust will purchase the participation. Above the trust, you have what is called the trust sponsor, and this is RWA Foundation. And this is really Maker's touch point with the real world. This is an entity in the Cayman Islands. And while we will do our best to limit the number of activities that the trust sponsor actually has to do, as a practical matter, there will be some decisions that neither the trustee, the paying agent, the verification agent, or the calculation agent want to do or are willing to do. There will be some decisions that somebody has to make a decision on, and it can't be the borrower. It has to be somebody, this is a decision involving the loan, involving the creditor, i.e., the trust sponsor. So we've said, okay, well, we recognize that there are going to be some decisions that the trust sponsor needs to make. And on the left-hand side, you see kind of, if you will, the management of the trust sponsor. And we've done our best here to make it as decentralized as possible as well. The supervisor is a company called Leeward Management, represented by Glenn Kennedy. There is a corporate director, which is Zedra Directors of the Caymans, and then the secretary is Silverside Management. So these are three unrelated parties that are actually performing the, if you will, management or ownership role. So the supervisor is akin to a shareholder, but they don't actually have an economic interest. They're basically supervising the director to make sure the director is following the organizational documents and following like a shareholder would, making sure that the directors are doing what they're supposed to do. That's the role of the supervisor. So it's actually a very elegant structure. I like the foundation because it is a true orphan entity and does allow us to have decentralized management. Having said decentralized management, at some point, neither the supervisor or the corporate director are really going to be comfortable making decisions that involve the underlying assets. They're sitting in the Cayman Islands, they're getting their fee every year, they sign papers, they take instructions, but they're not going to be involved in the underlying asset. And that's kind of where the Maker Delegated Committee comes in. So what we will basically structure is that, with respect to a handful of issues, the corporate director is not going to be able to take an action unless the corporate director gets the advice of the Maker Delegated Committee. And this is to kind of create a little more corporate governance and give Maker an opportunity to have a voice without necessarily having to go directly back to the Maker community. So on HVB, I mentioned earlier that the Maker sacred rights were potentially expanded. And in the HVB case, we've actually expanded the number of decisions that actually require going back to the Maker community. So here, and this is from the...
Christian, can I tell you to go back one sec? I wanted to make a couple points. If we don't have the Maker Delegated Committee here, how is this going to function? We got some older deals that basically take that out. You still have the supervisor and directors, but what really happens is they have tightly, narrowly defined roles. They don't want to make big decisions, nor are they paid for them. So you can wind up with a situation where the lender is kind of operating in the shadows behind the scene, not necessarily in bad faith, but underlying it all, the lender's making these decisions. I mean, not the lender, the borrower, which is, needless to say, a fundamental conflict of interest, to have the borrower making key lending decisions. And the other point I want to stress is when you look at the calculation agent, this has not been in prior deals as well that Maker's done. And why does this matter? Again, our borrowers, I think, operate in good faith, but if someone like New Silver or Success asks for a new funding, theoretically, they could give us their shopping list or their laundry list and tell us it's 40 million of collateral. And we probably advanced against it. No one is checking through the collateral and saying, wow, this is good or this is not good. Again, so these are two key holes the Delegated Committee and the calculation agent are filling. They're very important. If you want to be, highly likely to get paid back, you need these things here.
So on the Maker Sacred Rights in the HVB transaction.
Just
This is,
just
yep,
one
please.
second, Christian. I think Kianga raised her hand. So go ahead, Kianga.
Yep, Kendra, please. Hi.
Just a quick question in terms of the types of decisions, and Eric, you just started to get into kind of a specific example. So would that involve like checking against the deal documents, right? So if some new collaterals being offered, this is where we're probably maybe looking for some attorneys who'd like to work on this committee, even though
I'd say it's a mix,
do.
because you're gonna have an eligibility criteria, if it's mortgages. And so, they have to be US citizens. You can't have more than 30% of the whole book in a given state. So it's both kind of more risk analytics and also legal, careful legal compliance checking. And so it's both, I think is fair to say.
But it really is required, like knowing so Christian, when you talked about knowing the details of the deal, it sounds to me like some of these decisions will require going back to the documents, or is that something that some of the core units would provide that interface in terms of the committee needing to make a decision if something is in compliance with the contract or is permissible under the contract?
Yeah, so I think I will answer your question, Kanga. I think Eric answered the role of the calculation agent, and I think that would be a role that's completely independent. And we will be selecting a company or a third party that actually has experience doing it. So whether they have attorneys or what they do, but they're basically crossing the T's and dotting the I's and making sure the assets are what they're supposed to be. In terms of the Maker Delegated Committee, I think having an attorney or any experienced structured finance person would be very helpful. Do I expect them necessarily to, in the first instance, kind of read all the documents? Probably not. In a way, to use a corporate analogy, in a way, the delegated committees probably somewhere between kind of the executive committee of a company, not the board of directors, certainly not the shareholders, probably closer to an executive committee so that they have some decision making, but they would then necessarily rely on the core units to kind of provide the analysis. That's not to say, however, it's an interesting question as to whether the delegated committee could, and I think probably would, be able to engage its own counsel. So, you could find yourself in a situation, because stuff happens all the time. Look at Enron and WorldCom and all sorts of other companies that have had bad practices, where the boards of directors or executive committees have hired independent counsel to actually serve and investigate. Presumably, the delegated committee could do that. But just as a run-of-the-mill, I don't think they would need an attorney. Certainly, it would help, because the delegated committee should have experienced professionals that can ask the right package of questions, right? But in terms of, hey, what about this particular thing? Is this something that the borrower can do, or is this an issue? They can certainly, I think they should probably go to the core units and say, hey, you guys know this deal. Is this okay? So I was a bit of a rambling answer, but we talk about the composition, I think, and unfortunately I didn't include that on the slide. We do want the delegated committee to have alignment with Maker, structured finance experience if possible. We want them to be engaged. Do I expect a non-legal professional to read 150 pages worth of documents on day one? Probably not. Yet I would expect them over time to become familiar with the deal and really, frankly, be inquisitive. I think we want the members of the delegated committee to actively ask questions, because the worst thing is you have somebody serving on this delegated committee that's a figurehead and is not actively engaged, because frankly, they're not serving any role. They're just taking up space. So, we want people that are engaged and inquisitive. Sometimes that includes having a lawyer on it, a structured finance person. You could have a technology person. I think it's anybody with a strong set of.
Let me give my 2 cents
skills.
here, having been in a lot of asset finance desks in my career. I think ideally you would have someone who knows asset finance commercially. And then not that you only have 2 people, but you want to have that asset finance commercial knowledge. And then it's nice to have a lawyer who knows the legal structures. At the end of the day, almost any decision being made is a commercial decision. It's just the question is, when do you need the legal expertise? When do the commercial people know the legal issue is big enough they need an expert to weigh in? Because they can't, they can't attach a dollar value to it without a lawyer really guiding them. So yeah, if you ask me, you got to have some commercial asset experience, and then it's nice to have the lawyer. But if you don't have the lawyer, you just got to go. No, it's time to get one on certain issues, not others.
As always, Eric is more eloquent than me. Thank you, Eric. Did that answer your question, Kyanga? Next sliders. This is coming actually from the draft trust agreement, and these are decisions that neither the trustee. Well, first of all, these are decisions that the trustee. These are matters that the trustee cannot do without going back to the maker community, and to have kind of a belts and suspenders approach, if you will. I've also, or will also provide in the organizational documents for RWA Foundation that the trust sponsor, i.e. the directors, can't ask the trust to do any of these things either. So what are these? So these are what I would call maker sacred rights, at least vis-a-vis HVB. We've talked about increases or decreases in the commitment, a reduction of debt ceiling to 0. Here we have termination of any of the master participation agreement or any of the other transaction documents to which the trust is a party. We will include, and we're building these out to be key things, any amendment to the following certain sections of the master participation agreement. So this would be, right now in HVB, we have, Maker has the maximum exposure on any loan at 50%. Well, you wouldn't be able to buy 60% or 70% of a loan without going back to the maker community. So that's what the maximum percentage of the trust retained interest is. We will have loan criteria and eligibility built in. So, let's say it's, 40% commercial real estate. Well, we couldn't make an adjustment to the trust where we buy 100% commercial real estate without going back to get maker community approval. We wouldn't make amendments to the certificate of participation. This is the document that actually reflects the actual loan being purchased. You wouldn't have amendments to any of the kind of key agreements. The loan servicing agreement is an agreement between the trust and HVB for HVB to service the loans. The calculation agent agreement is the agreement between the trust and Ankara to perform this confirmation function. The escrow agreement. So again, no amendment to kind of key documents. Any change or removal of the trust sponsor, any change to the beneficiary of the trust, any change that really expands the powers of the trust sponsor. I mean, our goal is to keep things as static as possible. So to the extent that the powers of the trust sponsor in the trust expand, that should be something that the maker community approves. Obviously any change to the situs of the trust going from Delaware to Nevada, for instance, and so forth. So you can see here, we've taken the concept of maker sacred rights and expanded it. and said, okay, with these things, these are the types of things that are going to go back to the maker community. So now you say, well, what is it that the delegated committee, you've told me everything that the maker community does. Now, what does the delegated committee do? My answer to you is the delegated committee does everything that falls through the cracks and doesn't show up on this list. So do I know today all the bits and bobs that either the trust sponsor is going to say, hey, I don't know what to do, can you help me? Or anchor a trust as calculation agent is going to say, hey, I don't know what to do, what do I do? That'd be the type of thing that goes back to the delegated committee so that the delegated committee can make a decision. That's kind of the decision-making allocation. Now, I guess two things. One is, the number of members that are on the delegated committee and voting, how the delegated committee works. I think we probably need at least 3 members on each delegated committee. It's better to have an odd number rather than an even number. And I think that my preference in my ideal world is that people do things on a consensus basis. So notice I did not say unanimity, I said consensus, meaning that the parties work and collaborate and cooperate and come to a unified decision, recognizing at the end of the day that if, with 3 people, you may have 2 different decisions. And I think at that point, you probably do a majority vote. And again, this is one of those areas that, we test it and each deal might be different. And we find that, okay, with respect to an HVB, it's a regulated bank, it's a highly structured transaction. Gee, we feel comfortable with the majority vote and 3 people. There may be another deal that we get in the pipeline 6 months from now that we kind of say, geez, we'd like to have we'd like to have more people, or, maybe this particular thing we want unanimity. But right now, my thinking is kind of consensus with probably a majority vote in the event that you can't reach consensus. I am going to stop sharing because I don't have any more slides and just kind of want to open up, I think, 1, to questions, and 2, the way that we propose to have the delegated committee populated is, 1, get volunteers, the best, and then as part of the risk assessments, have those individuals nominated as part of the risk assessment. So in the SocGen risk assessment, we have a section on the delegated committee, and right now it's blank in terms of who would be on it. But the idea would be that when the community votes on a transaction, does the governance vote, that they actually vote the original delegated committee. Now, of course, they can. I guess the other thing on the delegated committee, is that we would anticipate, I think this is how we structured it in SocGen, is that the delegated committee members would have a term of a year. It could be shorter, could be longer. Certainly the maker community could change those persons at any time. It's entirely at the discretion of the maker community. But 6 months seemed probably too short. A year was good. Going over a year, gee, maybe there's a sense that this is an entitled position, which it's not. So we thought that a year would be good. Now, that doesn't mean that the maker community can't revote a particular person on. Again, we're trying to be as from my perspective, that's really a community decision, not a Christian Peterson decision. So I'm going to stop sharing for the moment and go to questions. see, question. So one question that we had from Will is how would we consider testing the approach and therefore the success or not? Well, if it fails in a blaze of fire, then it will not have been a success. If nothing happens because decisions come up and the delegated committees, at each other's throats, that would probably not be a success. If we have a reasonably smooth functioning of a loan, recognizing that because this is going to be the first time this has ever been done in DeFi on a decentralized basis with a bunch of strangers who only have an interest in seeing Maker succeed, I think there's going to be a bit of testing and seeing how things go. I mean, ultimately, if we conclude 6 months from now, because a number of issues have come up and it looks like Christian and Eric came up with the world's worst idea, well, then we just adjust.
Yeah, I mean, I think we'd be cognizant or looking for bad decision making. I think that's clearly a problem, and something that probably becomes highly politicized in the community, because I think we want to have good decision making and something that seems to work relatively smoothly.
And how are we thinking about the definition even of like, so two things actually, the definition of bad and good decision making, and how are we actually even capturing the data that allows us to essentially look back on it over time, right? So I'm just thinking of the top of my head, and it's the closest analogy that we have for this is the Open Markets Committee that exists for crypto loans. I know that it's different. We have like much more, like a much wider group of counterparties here compared to the Open Markets Committee. But how because I would assume that possibly even in a scaled fashion, like auditors, be it within the DAO or actually external, from time to time will look and have a pick. Okay, what is it?
I don't think auditors would be that.
No, I agree.
I think these are sophisticated judgment calls, and if you're going to have someone want to review it, that's like, for instance, some Block Tower with Kevin and Jack were, professional credit investors. Since everything I think being done here is going to be transparent, if the committee did something really dumb, and Jack or Kevin looked at it and said, "Wow, that was the dumbest decision I've seen in 5 years." But again, you need to have some expertise over people that are reviewing the decisions. That's the trouble in this world. You can't have your average person who's never done structured finance probably opining on whether it's a good decision. You got to have someone who kind of knows what they're talking about.
And it's not. I mean, to Eric's point, it's not auditable. I mean, what is a good decision versus a bad decision? Well, when you see it. At the end of the day, I think because these are commercial decisions, I think that the most important thing is that it remains transparent, and ultimately it will be the community that decides whether or not a decision was a good one or not. Much like everything that we do now. I mean, if the community decides that what Eric and I have come up with makes total nonsense, we're merely servants of the DAO, right? They can tell us to do something different, and to me, it's just going to be a process. But these are commercial decisions. You can't really have an audit, but it is important that it be transparent so that the community can make that judgment.
And the other thing is, Eric, I'm on my high horse of needing more expertise. I think you need specialized expertise from various maker holders or delegates, they get this. And maybe if they're not on the community, they keep an eye and, because ultimately these are judgment calls by skilled professionals And you need other skilled professionals to call it out if it's like gross dereliction.
Yeah, and Kianga had asked what would be the time commitment and work product expected, such as weekly written updates, AMAs. It's a good question. I don't know, like SocGen, I don't think it's going to be a huge time commitment simply because the underlying asset is so rigidly structured anyway. And because in a way, SocGen's more crypto-like because the asset is sort of on chain, or you'll see we've kind of hybrided on chain it. So it'll be a little more self-functioning. HVB, we are trying to make as self-functioning as possible. I think if we looked at another transaction, I think the transactions that are going to require the biggest commitment are probably those where we've not underwritten the underwriter. So those transactions where Maker has a one-off loan, like I suspect OPM and ADT combustors, if I was to guess, may require a little more because we're the only lender, right? Whereas in the HVB transaction, HVB is going to be doing a lot of the work, frankly, at that point. So I wouldn't see this to be a weekly thing.
Do you think you want to structure in the risk report that, there's going to be like a weekly meeting for the committee that you'll host, or monthly, or, I think it probably would help people who are thinking about the commitment to have a sense of how the committee would operate if you're kind of running the committee, or if it's more ad hoc where they should just be on standby if something comes up, or do you see this as much more of a like regularly scheduled?
Kianga, hey, it's Eric. This is more ad hoc because the need for these is on commercial business needs of the borrowers. So typically they're going to come to us with something, or we're going to see if it's something needs to be happening with them making a request or something's really going wrong. So it's not at a predictable time schedule. It just kind of tends to happen.
But having said, and I agree with that. I think having said that, I think I think initially, we will probably have to sit down with the committee and say, okay, here's the deal. Here's how it works. Here's, to do a walkthrough. I think like a quarterly AMA might not be bad. And I know in the HV, again, SocGen's going to be slightly different because it's just one asset. With HVB, we're building in mechanisms for regular reporting. So there's reporting from HVB, there's a reporting from the trust. So we can kind of track the cash all the way from the real world back into the Maker vaults. That might be the type of thing that you do on a quarterly basis, and that the real world finance core unit legal sits down with the delegated committee, walks through it with them. Okay, here's what's come in, here's how we've digested it. And then, maybe either jointly or separately report back to the community.
Christian, on that note, I'd say it is probably quarterly or monthly, depending on the asset. But I think one of the key things here, if I was going to be on the committee, at least how I think of it, is you want to look at the asset performance. So when you make a loan to someone, you have expectations around like volumes and credit performance and all these things. And then you just kind of gently track it over time. And if it's following expectations, it's clear sailing, no big deal. It's when things start going off the rail that you start caring. Or for instance, if they're growing really fast and need a new facility and upsize, it's just kind of keeping a track of where the business and the asset is, if you will, and having an idea of when it starts hitting an area of concern. Could be good concern if you want it to go bigger. More often than not, bad concern around things not going well.
And I think, Kianga, this is probably one of those areas where we experiment. And I think your questions are good ones. honestly, I'm not sure we had thought about the regularity of the meetings. To be honest, I was just worried whether the community would throw up all over the idea or not. So, I was like, okay, let's throw this out there, see if it's, and okay, so nobody shot me yet. So, okay, so
Christian,
far
hey,
it seems to be working.
it's one thought. If I, given prior seats I've had where we do this, perhaps you'd have a monthly committee for the different folks on it, and you go through every asset and you look at the remittance, the most recent performance of that group of assets in the company. So every month you roll through it, and it might be really quick. Hey, everything's going great, nothing to worry about. And it might not be so great. But typically, in credit portfolios, you want the discipline, where if the committee's probably going to be reasonably involved, and maybe you have an hour meeting once a month when you roll through everything. And so you're up to speed on what's going on, and you even know what to look for. So maybe everything's fine for 12 months, but then suddenly something goes sideways, but then you're usually not surprised, because that was one of the key risks up front, and you've been tracking it every month, and it finally went off the rails, and you're like, oh shit, now what do we do? But you're not surprised.
That sounds good in my mind, that there's some kind of a regular cadence. There's some kind of ongoing active responsibility. I would think that this group, should also get to know each other personally, and, that there's some dynamism involved in being part of this. And so like a regular check-in, whether that's monthly. And then, there's trust that's built among that group, and rapport with the core unit, rather than just sort of being on standby and then boom, something happens and you don't really know, if you're on the committee, how to get up to speed,
There's
or
no context.
Yeah, exactly.
And I think maybe we should think of renaming this, or at least thinking of it. It's also an asset management oversight committee. That's the role in a bond portfolio. They call it the asset management, overseeing the performance of the existing assets.
You're so TradFi.
There's a reason they put a lot of effort into that. They don't like losing money.
Yeah.
I mean, really, the good shops are obsessed with what's on the books. How it's performing.
So we're coming up to the hour. So I've received some. We've received, I think, 3 or 4. I don't remember, names for people who are interested. So I think the first one we probably will want to put as SocGen, because we want to publish the risk assessment this week. So if you've reached out to me, can you just let me know if you're okay to serve on the SocGen committee? And again, whether it's 3, whether it's 5, I'd like an odd number. If we have an even number, then I'll have to rustle up an odd person to serve as the odd number. But if you could just send me a message either on Discord, on the forum privately, or on the forum publicly, or email, it doesn't matter to me. We will put your name in the risk assessment, just as indicating that these people are going to be on the delegated committee. So if you could get that to me today, that would be great, because we are actually wanting to publish it tomorrow, Friday at the latest. And then same with HVB, although SocGen's probably more pressing just because of the risk assessment, but we look to be doing the risk assessment on HVB. We're in the process of putting it together as well. So if you're interested in HVB specifically, let us know. If you have any more questions, let us know. If you have any other ideas, let us know. I mean, like I said, we're experimenting, and we want as much input and participation and transparency as possible. So with that, I thank you, and I cede a minute back of time to you to your next meeting. Great. Thanks, everybody.
Thank you.
Thanks.
Thanks, P and Eric. Legends.